Okay, it's the Wall Street Crossover Show, and we're here with Darren Sinden, who is the markets commentator for Admiral Markets. How are you this afternoon?
Very well, thank you, Jack. And yourself?
I'm okay. I'll have to attempt to switch off my phone at some point, but I'm okay.
Good stuff. Well, it's been another interesting morning in Europe. Obviously, the focus has been predominantly on the Greek situation, and we hope we're edging ever closer to a final resolution there. I myself remain...
You can't say it without laughing, can you?
Well, I can't, because I'm cynical. I was just doing some quick math on the way to the studio. You know, if they raise an extra €6 billion per annum through these measures they've proposed, rough calculation, I don't even think that's half of the interest payments on the total outstanding debt in a year. So they've got to be seen to be doing something. But
the overall number is what, 1.1 billion is owed? Is that at some point, or is that?
Oh no, they've got to pay back I think 1.5 billion euros on the 30th of June. They've got a wage bill of the same for the civil service. The total liability is about 320 billion euros. So it's anyone's guess how they're going to fix that. Anyway, let's leave that to conjecture, and let's go
into the real stuff.
Yeah, absolutely. So we'll start with the data that's been released over the European session, and quite a bit in the way of PMI data this morning. So I've picked out there's a Purchasing Managers Index for anyone who's in any doubt. So I've just picked out a couple of numbers from the plethora that we saw today. First of all, the German manufacturing PMI for June, that came in at a read of 51.9, so ahead of the forecast level of 51.3, and well ahead of the prior 51.1 level, so a new 2-month high as far as that's concerned. And so that's obviously a positive signal, although probably lost in the background melee of euphoria over Greece. And then for the wider Eurozone, the composite PMI, so that's the combination of manufacturing PMI and services PMI, and that figure came in at 54.1, again ahead of forecast.
That's great. Yeah,
very impressive. Forecast of 53.5 and a prior read of 53.6, and this is a new 14-month high. So ECB might be thinking here that that quantitative easing is having some early stimulative effects. We'll have to wait and see. There was a downbeat data point though, and that was the French business confidence for June, came in at 100 versus the forecast of 102 and a prior read of 103. Now I guess the business confidence could have taken a knock with the Greek situation going on being unresolved, so we shouldn't read too much into that. But I think it does show you, it's not a level playing field yet in Europe, and we're bound to see some sort of contra data points as we go through the rest of the summer.
France is rather sick, or has been rather sick in general.
It has, but it had been sending out some encouraging signals, sort of in across the start of the second quarter of the year. It's been a bit mixed, to be fair, in the last month. So I think if I were to be looking at one economy overall in Europe, you're right. You focus on France and see if their ills are being cured. And then the other thing that took my eye today, as we sort of entered the European session, was the performance of the Shanghai Composite. Wild swings, absolutely wild swings. A 7% range on the day. Actually did finish up in the end, but volatility there is not going away. And if something's going to pop badly at some time,
it would be ironic after everybody's looking at Greece, and actually it's China which leads us into the abyss.
Absolutely. So you do need to keep an eye on other markets apart from the ones where most people are focused. So that's the data for today. If we move on to have a look at European movers, can't really leave Greece alone, unfortunately. So the FTSE Athens 20 index up just over 3% this morning, and Greek equities rallying hard on hopes that a deal can be done. Obviously, we'll know more about that as the week unfolds. And then the individual stock that took my eye was Smith & Nephew, SN, the ticker in London, £11.15, up 2.6%. And the reason for that, quite simply, an upgrade by UBS. They raised their price target to £12.75, and they flagged potential for margin growth in the wound management business at Smith & Nephew. So they see those as a decent bet going forward. So there we are. Moving along, M&A rumours and movers. So this is a story that's been bubbling for a while, but Citrix Systems, CTXS is the ticker. You probably know them as the company that makes GoToMeeting, GoToWebinar software, and often a lot of the back end.
Never works for me, that stuff. But anyway, there we are.
There we are. They've got quite a few well-known software products. Reports in the media that they could be considering a leveraged buyout offer. Range for the stock, well, it's 71.05. They closed last night. They've been 56.47 in the last 52 weeks and as high as 72.89. The interesting point here is that the activist hedge fund Elliott Management has a 7.1% stake, and they have called for changes to be made at the company. Current market cap of Citrix Systems is around $11.3 billion. The feeling is that a leveraged buyout for it to be successful might require a sort of 13 billion valuation, so it's roughly a 15% upside. What's interesting is that tallies quite nicely with the Bank of America Merrill Lynch upgrade, which was made on the 12th of June, where they gave a target price of $82, and I think that I'm right in saying that was reiterated yesterday. Elliott's got a good track record. It's previously lobbied for change at other tech companies such as EMC, Riverbed Tech and Novell, and in a recent letter to the Citrix board, the fund advocated substantial cost cuts and the sale of the GoTo and NetScaler software units. The approach is said to be friendly for now, but if Citrix management don't respond, then you can expect them to get tough, as it were. So
seems like an incredible valuation, $13 billion for what they do, but that's the way the market is these days.
It is, yes, it is, Zach. Yeah, but we'll have to see if anybody's forthcoming with that kind of leverage to purchase them. So, but one to watch definitely from here. Okay, and then moving on to the data points in the US this afternoon to keep an eye on. We've got a bit more to get our teeth into today. To my mind, durable goods orders is one of the ones to watch. This is the May number. We're looking for month-on-month changes here. Two components to this data point. So first of all, the new orders, and our forecast here is for a read of minus 0.6 versus a prior fall of minus 0.5%. They also have an X-transportation number, and the reason for that is that durable goods is very sensitive to the aircraft manufacturing industry. So X-transportation, we're looking for plus 0.5, which is
quite. I mean, this used to be one of the most important numbers. Is it still like that, or has it come off the board a bit?
These things have sort of come in and out of fashion, don't they? For the moment, I think people have taken their eye off this one.
Yeah.
But let's see, plus 0.5, the expectation for the X-transportation number against the prior read of plus 0.5% as well. One that it does seem to be in vogue at the moment. New home sales. We had the existing home sales number early in the week, and they went very well. So today for new home sales, we're looking for 525,000 versus the prior read of 517,000. Obviously, anything above that would be good news as well. And then the other sort of key number today is the flash manufacturing PMI for June for the US, a forecast of 54.2 versus a prior 53.8. Obviously, a higher number could be seen as being expansionary, and that probably isn't a bad thing for the US economy. So let's see what comes of that. And then moving on to our pre-market movers and levels, a bit thin really. In terms of pre-market movers, although there's been some news just before we came on air which probably would have trumped this. But first of all, Energy 21, which is ticker EXXI in the US, up 3.5% pre-market on news that the company had reached an agreement with the Bureau of Ocean Energy Management. This is one of the US regulators that make sure that oil companies are exploring off the Gulf Coast and elsewhere are well funded and have sufficient insurance in place in case anything goes horribly wrong. And then Green Dot Corporation, perhaps one that's not familiar to many of our European viewers, but GDOT is the ticker there, $15.31, up 31.6%. Green Dot is a bank. It's a provider of prepaid and store credit cards, and it's basically its major contract with the US retailing giant Walmart was renewed yesterday, and on the back of that the company announced a $150 million buyback. So the market likes what it hears there, and as I say, they could up 31% pre-market. And in terms of levels to watch today, Equity markets in Europe, obviously, as we've seen, are better again. In terms of the FTSE, we're now looking at 67.88 as our downside level, plays 68.70 to the upside. The DAX, sharply better again this morning, so now 11,500 is our downside target, and I've gone with 11,606 as a new high.
Yesterday, not a fluke. I mean, but they're built on these gains.
Oh yeah,
it's really quite.
It's another solid day of gains today. Is actually quite right. And in terms of the S&P, the US markets haven't really responded as well as the European ones. Nonetheless, they're a bit better again. So S&P now 2110, our downside level, plays 2130 to the upside. And for the Dow, we've gone with 18,010 and 18,120 as the levels to watch. But I suspect the bias will be to the upside again today. And in currency land, Euro's weakened slightly against the dollar. So 112.00 now is the downside level to watch versus 112.52 on the upside. Slight easing in Aussie US dollar, and it's like tightening here as well. So we go with 76.93 as our downside level and 77.45 on the upside. Dollar yen, yen weakened slightly, so it's the rate's edging up, but it's nothing to get too excited about. But nonetheless, 123.25 now our downside level, and I've gone with 124.00 for the upside. And cable hanging in there, 157.46, plays 158.05 to the upside.
So the dollar back in business really over the last 24 hours.
Yes, certainly against the euro, it's been the dominant currency. Of course, that could all change on news from Greece in either direction.
Right. Okay. Well, we'll see how that plays out. Intriguing, but I suppose the dollar strength story should be the easiest one in the market, really, with interest rates and everything else. But things don't always work out like that.
No, they don't.
Darren Sinden, a market commentator, Admiral Markets. Thanks very much for the Wall Street Crossover show today. We'll be back 1 o'clock tomorrow.